Good morning. How we doing, guys? Come on in. We got big bar 34. We're a minute 10 out here from the close and rollover of this bar. We've had actually a reasonable day as far as price action for what it is. We've got basically a big trading range, about 250 points wide since the open. And I'm looking at this, and we've got some wicks. And I'm thinking, well, I guess I'm trading for the most part continuation in the range. Now, from bar 29 until 34 here, which is the current bar, 40 seconds out till the close, we just got some news or something. If a headline comes through, I'll let you know. We've got a bit of a single bar sideways range here, these last 6 candles. So we'll see if we can get away from this. And we've got work to do, big dog, so let's do it. How we doing, guys? Gamma, Jackson, Outlaw, JJ, what's up? Let's go. Okay. So Trump, the headline is Trump on Truth Social saying Micron is announcing some Trump accounts. We don't know what that means. Clarification. I need it right the first time, big dog. A $250 million investment in Trump accounts. That's not going to do anything to the market, but it triggers a little bit of a wiggle. Okay, let's get away from this single bar range. By the way, ATR, we're sitting at 44. Now, by the way, when we look at this, so this is the current look. This right here is the full day's look. Now, that channel is 150 plus points wide, maybe 200 points wide. Trading reversion scalps the same way in this big channel that you would in a tighter bull, soft bull channel is very hard to do. You would think that the margin for error would be much wider. And while that's true, that also means that the risk is very large, which means what? You have to size way down, which means what? The average hold time on a trade is going to be about 4 hours. And in most cases, you're better off not trading that super ultra wide soft bull range, but just trading intraday stuff, because that it takes a scalp setup, and because it's so wide, it turns a scalp setup, what is traditionally a scalp setup for me, into an intraday swing, which I'm not particularly into. There's too much exposure risk to things changing when you start increasing that average trade duration to hours. Again, on a setup that's typically a scalp. All right, we got the wick high of this little channel here. The wick high is bar 31 at about 30,278. So we'll see if the bulls can get us up through there. Head back toward 30,300. Now, again, I don't care which direction this breaks out of this sideways range right here. I just want it to pick a direction and go. There you go. All right, bulls taking out that high, that wick high of 31. Getting rejected very quickly. We'll see if they can sustain that breakout. All right, here comes the rollover of bar 35 into the open of 36. It's going to be an inside close, meaning inside the wick high of 31, which means inside the trading range. So now I watch 36 to see if 36 wants to head upside. Give me a nice clean bull close. Alani Flit, no. I'm back in the driver's seat today, big dog. We're back in the driver's seat. I had some words, and we're stocked up. All right, so these bulls are really having a hell of a time breaking us out of this sideways range here so far. I mean, that's expected. 80% of these breakout attempts are going to fail eventually, at least. Which we've already seen. I mean, the wick high of 35 meaning did take out the wick high of 31. These bulls struggling to get us much higher than that. Okay, we've got about a minute 20 left here until 36 rolls over into a new 5-minute bar. That's bar 37. ATR sitting at 43. All right, 36 is going to close right dead in the center of that trading range, that sideways trading range. ATR is starting to fall a little bit here. We're down to 41. Now, as long as ATR can stay above, I'd say about 30. I'm cool with that. If we head down into the 20s on ATR again, we saw that yesterday for the first time in a while during the New York session. If we can hang out above 30 minimum, I'll be happy with that. Now, when you look at this, we kind of like drove down into the New York Open, and now we're bouncing back, and it's tightening, right? What I really hope doesn't happen for the rest of the day is we maintain this as a wedge, and it just slowly tightens up all day into the close, because then we're kind of like pinned back. Tomorrow, we'd probably break out of that and get back to normal volatility if that does happen. But big dog, I'm not worried about tomorrow. We got to make money today, homeboy. So let's get away from that little wedge. Would be tremendous. And honestly, downside would be just about the quickest way to do so. Bears fading that right back downside. Bulls having trouble even getting into the upper third here of this sideways range. Come on, Bears, take this thing off a cliff. I'll tell you what, man, if we keep this up for a few more bars, that ATR is going to tank into the mid-30s. We're sitting at 40 right now on the average range here of a 5-minute bar on NQ. And the range on these bars is just getting lower and lower and lower. We're hanging out more and more in the middle of this range, which is not good for us. Now, we are coming up, by the way, on 45 minutes of this consolidation region. And when you have a little wedge like this previously, right? Things are kind of trying to tighten down, and you kind of consolidate your way out of any reasonable argument that that's still a thing. Especially coming up on the 45-minute hour region of this sideways action. And then rolling over into the afternoon, we might see volume pick back up a hair. We're going to pick a direction and make a move. How big? I don't know. Let's hope it keeps that ATR in the 40s. If we could drag it back up to the 50s, that would be great. There you go, Bears. Take that baby lower. Alright, good. So we got a new bar here. We got 39. I'm watching 39. It's not the most probable situation, by the way, to break lower and give me a nice short setup, but it's my preferred situation. So let's see if the if bar 39 can do that for me. I can't short 38. It's just closing inside the trading range. Way too much temptation for the bulls to just do what they're currently doing. Alright, there you go, Bears. That's what I want to see. Let's take this baby lower. Give me a nice, beautiful close. 3.5 minutes out. Bears finally trying to take us out of this thing. Getting wicked back here right away. HR sitting 40. Alright. Minute 27 out. Come on now, Bears. Let's hold that guy downside. All right, 35 seconds out here from the rollover. Come on, Bears, don't wick back on me now. I want to see a nice clean close here out of the Bears, not too much wick. And if they can do that, I've got a big old stop limit sell or the bears? 15 seconds out. Oh, you bears, you bunch of babies! All right, whole bunch of nothing there on 39. All right, watching bar 40 here. See those bears step out of the way right at the last second? I'll take a range scalp if the bears can, I'm sorry, if the bulls can take out the wick high of 39. Because then I can use that wick low of 39, just bet on the trading range. Did I just get skipped over? What the hell just happened? Are you kidding me? And it does exactly what I wanted it to do. I got skipped over. I give it multiple ticks. So, by the way, if you have no idea what just happened, that's a stop limit entry order. And you can give it, there's a stop and then there's a limit. So the limit section, you can set a certain number of ticks that you're willing to let slide to still give you a fill. If it jumps, it can actually jump over your order. The more ticks of width you give it on a stop limit, the higher probability it is that you'll catch the liquidity and get a fill. Now, my leader account today is actually one of my personal accounts. I'm just trading a mini in it. So that usually wouldn't happen in a when I'm using my sim prop leader account. Again, of course, I'm always copy trading my prop accounts. But today I'm like, let me just use this little personal account that I have loaded up as the leader. And of course, I fucking get skipped. So if you don't want that to happen ever, you can make a wider tick allotment in the limit section of the stop limit. That exact thing, by the way, you just saw it happen live. That is why you never, ever, ever use a stop limit to manage your risk. You use a stop market order to manage your risk. Stop limits are entry orders. All right, we'll watch bar 40 here and see what we can come up with. Alright, Bears, take this son of a gun downside. Get us away from this. By the way, low of day is down at 30,087-ish. Alright, 215 out here from the close of 41. Let's see what we get here on 41. Let's just watch how 41 closes up. I'm not a huge fan of the 40-41 sequence, obviously, but we did have 38. 39, and then had 40 been a cleaner body, it would have been more like a maybe B+ short. So let's watch here how 41 closes. We're a minute 40 out. All right, 30 seconds. Come on now, Bears. Don't you wick back on me now, man. Well, I better be ready just in case, huh? Oh, inside close. Rolling over into 42. Hey, don't you go anywhere. 2-minute break. Be right back. All right. Welcome back. We got big bar 42. Minute 28 out. Now, the problem with 42 is that we've now seen 39, 40, 41, all of which were in a little single bar sideways range on a micro scale. If you looked at 39 through 41 on a 5-minute chart, if you looked at this region on more like a 1-minute chart, you're going to have a sideways range. So that makes it sort of a tall order for me to short 42. This is a 2-minute chart that you're looking at. All right. 27 seconds out. ATR is 40. Range on this bar, about 45. High 40s. Low of days, the wick low of bar 2. Which is way back there. All right, let's see how this guy closes up. I'm not against shorting it if it's clean. Better be clean, though. Oh, it's ugly. All right, bar 43. It's a whole bunch of inside action, isn't it? Meaning inside the previous few bars? Okay, we got a minute 26 out. And 43 here is trying to get some work done. We'll see if we can close beneath the wick low 42. And then I got to keep an eye on the range here. Minute 15. Okay, 15 seconds out. Come on, Bears. Been letting us down here the last hour. Big ol' inside close out of the Bears. All right, bar 44. Let's see what 44 brings. Now again, that low a day is back at the wick low of 2. Right around 30,087. It's a little bit early yet for a stop hunt, but I got my eye on it. Might as well check out a 2-minute here in the meantime, huh? ATR over here on the 2-minute, it's at about 24.25. One-minute chart, ATR on the 1 minute sitting 19. It's actually reasonable for a 1-minute chart. Okay, so previously we were in a big sideways range, right? At this point, it's very clear that the range has broken and faded. We even rejected off it here on 41, 42. The problem is we're not really getting, we're not getting the level of confidence from the Bears that lets me just smack that thing short. At least not with the stop limit sell for continuation. But I still got my eye out for more soft bear channel type trades. Anything opens up. All right, we've got 44 rolling over into 45 here, 5 seconds. We'll see how the rollover goes. This guy's going to close as a tiny bull body. First little bull body since bar 39. They're on 44. So watching 45 now. Man. What's up with you guys? You have positions on? Who's sitting long? Who's sitting short? I'm actually curious now that we got 44 close up. Is everyone just trading short side, or is it we got people sitting long in here? All right. Minute 12 out here from the close up, 45 into 46. The trouble here now is that trading range back between bar 29 and 37, I suppose you would say, maybe include 38, 39, 40. That clearly broke. So now getting long here on the break of 44 for me, especially considering the wick size of the bottom half, or I guess bottom 3/4 wick on bar 44. That's a tough argument for me to make. All right, let's see here. In the chat, as far as your positions, we got flat, flat, long, long, short, looking to get short. Everyone's all over the place. As expected in a situation like this, where, you know, you're getting closer and closer to 50-50. If we were to take a poll and get 10,000 responses, of all the people who weren't flat and did have a position on, you'd end up with about 50% long, 50% short. And, you know, I can say that with confidence just looking at the market environment. Now, if we were in a big bull trend, it'd be closer to 65-35, if not 70-30%. Question, does it ever make sense to move stop losses? Not, to me, not statistically in the way that most people do. Most people move their stop. They'll get long, for example. They'll be 4 points in the money, and they get scared, and they move their stop to break even. And now they're like, ooh, it's a free trade. It's not a free trade. You had risk on to begin with. It was never a free trade even after moving your stop loss because you had to put on the risk in order to get in the money, correct? So, plus it destroys your win rate because you're giving yourself almost no room. I will move my stop losses when I get a supporting setup in the direction that I already have a position in if I'm not taking profit on it yet. It also makes sense to add in that situation. You just got to be careful with not getting too big in terms of sizing on your prop accounts. So this is a 2-minute chart. It's pretty wicky right now. Back on a 5-minute here on NQ. ATR sitting at 38, 39-ish. We got 2 minutes left here on bar 46. Ah, man, it's just a 2-minute just looks ugly. And you know a 1 minute's gonna look even worse in the current environment. Yeah, you've got too many arguments to make, because on a 1 minute, you gotta kind of zoom out to get full context here. You can make a sideways range argument, you can make a soft bear channel argument, though now bar 230 here on a 1 minute chart is starting to mess with that argument a little bit. I think home base right now should be a 5. Alright, there we got a roll over here, 46 into 47, ATR down to 36. It was a test of the 20 EMA. Coming back into what was previously kind of the low end of that sideways range between bar 29 and 38. Alright, be right back. Don't you go anywhere, just grabbing coffee. All right, what's up? Welcome back. I'm watching here actually the close of 47. 10 seconds out. I can make enough sense of that here if it closes up nice and clean. Oh, goodness. Big adjustment there on the rollover. All right, order sitting out. Bar 48. Take it. Bulls, they will. All right. Stop goes there. 208.50. Just below the wick low of bar 47. And we're watching. We'll see which section of this guy turns into the actual trading range, whether it's the tighter section here, the wick high of 40 and the wick low of 44, or the wider section, that wick low of like 16, 18, and 44, and the wick highs of, I'd say, 31, 35. You could also say high of day, which is the wick high of 25. ATR sitting 36, by the way. Come on now, bulls. You know, I will say here that ATR, it is 36, but I'll tell you what, man, it feels more like about 20. Well, Bears, you want my stop, you gotta earn it, homeboy. Get through the wick low 47. Alright, we'll cut it there. Watching 48. Gonna get flat. And I'm flat. So we'll see if this turns into a range now. Jesus. I hope not, man. That's gonna kill ATR even more. We're sitting at 37. Again, I mean, that's pretty good. It's just... ever since bar 29, we've been having problems as far as, wicks. Bull's unable to get the job done there on the close of 47. All right, bar 48 here closing basically at the wick low of bar 47. So keeping an eye on 49. You know what I'm actually going to do? I'm going to bet on this range and use the wick high of 40. Just because it would not surprise me at all if we form a big trading range here. So it's worth a stab at a scalp here for me. See if the bears can take us a bit deeper here in this range. Oops. You can't see anything. There you go. Well, come on now, bears. Okay, ATR 35, risk on this trade less than 21 points. So I'll look to get at least 1R here. There we go. Better than 1R out there. All right, watching 49. See what we get as far as a close here on 49. So I had the right idea, huh? I think we're probably looking at some sort of a trading range. Bottom area to be determined. Stu says, whoops. Jumped in on NQ instead of MNQ. Got out with a profit anyway. That could have been a big whoops, homeboy. I've done that shit before in the in my fundeds. Hate to admit it. You know, you have like a 50K or a group of 50K fundeds, and you're like, all right, I'm gonna trade 5 micros in each account today, which is totally reasonable size in a 50K funded. And you put a trade on, you sit back, you look up like 3 minutes later at your P&L, you're like, oh fuck, I'm in 5 minis. Try not to make that mistake all too often. All right, I'm watching bar 49. If I can get a nice clean close out of 49, I will short it with a stop limit sell if I can get a fill. All right, 15 seconds out. Come on, Bears. A little bit lower. A little bit lower. Clean this up. Ugly. Huge wick. Nothing. All right, big bar 50. Let's see. Now, I'll tell you guys something. If 50 bounces, then I'm confused. And what I always say is if the market... Sorry, if the market's confused, why the hell would I not be? And if 50 bounces and closes as a bull body, I'll tell you something, the market's confused as all hell. If it closes as more of a nice clean bear body, all right, we got a little more something to work with. Especially if it's just barely beneath the wick low of 49. Hey, man, by the way, if you haven't yet, I appreciate you hitting like here on the stream, man. It helps out tremendously. And we appreciate you doing so, big dog. All right, 350 out here till the close up, bar 50. With time frame, I am on a 5 minute. This is a 5 minute NQ chart. Nasdaq futures, big dog. Trade my Apex accounts. Take Profit Trader. Which, by the way, hey, Take Profit right now, 40% off and no activation fee with code BIG. B-I-G. That activation fee is $130. You're not going to pay it. If you use code BIG. Look, 220 out and bar 50's bouncing. I think this market's confused. So let's watch how 50 closes up. Yeah, I mean, the problem is, you know, there's that. We had this previous trading range, right? Which turns into these two lines kind of come together, and then it turns into this potential argument. It's way too early to make any type of this argument, right? It's just too early. That right there is basically the look right now. Yeah, 100%. Well, now I'd be very curious actually to hear from you guys in the chat. Are you sitting long or short or flat? As for me right now, I'm flat. And add a why, by the way. If you're sitting long or short, I'd like to know why. What's your reasoning? I'm not telling you you're wrong. We got a whole bunch of flats. Yeah, I agree with you guys who are sitting flat right now. Long, short. I think we're literally split down the middle to the vote. So, futures markets, tomorrow is normal. Okay, hours are normal, obviously, today and tomorrow. And then Friday, we close at noon. That's Central Time. I think that's Central Time. Let me double check. Central Time. Friday, the futures here close at noon Central Time, and then they'll reopen this coming Sunday at the normal time, 5 o'clock Central. And then obviously today hours are normal, and tomorrow hours are normal. And by the way, if you trade livestock, grains, dairy, so if you're trading lean hogs, big dog, making a couple $1,000,000 a year trading lean hogs and feeder cattle, you have no trading at all on Friday. Have any of you guys ever traded lean hogs or feeder cattle and made some money? I've actually got feeder cattle. I think I also have lean hogs on the ticker above my head. I check the price every day. All right, we've got big bar 52. Try to head down, take out the low end of this sideways trading range. No matter which one you want to look at it as. We got the bears testing the low end here of this trading range. I'm actually going to take a little engagement trade here. Keep me engaged and bet on the range. I can make sense of that risk management. Risk the wick low here of 44. Yeah, I'm cool with that. All right, let's get rid of this, clean everything up. I will say, if the bears can actually take that guy out, where my stop is, the wick low 44, I gotta tell you, I want to win the trade, but I wouldn't even be that upset, because that means maybe we're moving away from a sideways range. But until that occurs, I gotta bet on the range. So I'm sitting long at 177.75. ATR 35. All right. So 52, rolling over into bar 53, ATR 32. 1R here, about 26-ish points. There you go, bulls. Fade us right back into the range. Range, range, range. Not quite. Boom! Better than a full R, baby! Out there, I am flat. All right, keep it pushing here. Bar 53. 345 out. Bulls right back into the trade range. How predictable, bulls. You fucking babies. I guess the bears are the babies, aren't they? All right, ATR is still hanging out in the 30s, 34. Three minutes out. So, by the way, I don't remember now. I think first trade I took on stream was a loser, right? Is that right? I think so. But I'm now sitting green on the trades taken here on stream. I believe we've had 3 so far, 2 winners, 1 loser. First trade was a loser. It's so important, you guys. You got to keep a level head. Just because the first trade of the day or whatever your session is a loss, it really doesn't mean anything. It doesn't mean your day is doomed to be red. Just show up, continue doing your job. The chips will fall as they may by the end of the day. And as the sample size gets bigger and bigger and bigger, assuming you're a trader who has positive expected value and a statistical edge, you're going to be fine when the sample size works itself out to be bigger and bigger. Now, on the flip side of that, you got to understand, if you don't have positive expected value, you have negative expected value, you're not a break-even trader, you're a losing trader, or of course profitable, you're not, you're a losing trader, then the more trades you take, the worse it's going to get. So once you're at the point where you're past break-even and you are covering commissions and fees and you're making money on top of that, there's nothing to be fearful of or concerned about or scared of or worried about when you're putting on risk, or because the longer you sit here and do your job, the better the numbers are going to get, right? Do casinos get concerned when, you know, your grandma and grandpa from Omaha, Nebraska are sitting at the Vegas blackjack table and they're up $1,000? No, they're good because they understand the bigger the sample size gets, the more hands they play, the higher the probability is that the money will end up, at least the juice built into the game, will end up in the hands of the casino. And that's why Vegas looks the way it does. We're running the same business model as the house. Okay, 3.5 minutes out here from the close up of bar 54. Well, how we sitting so far today? We're rolling over into the last couple hours of the day. You guys having a reasonable day? Certainly not record breaker territory, but I'm having an alright day. Can always get better. All right, minute 54. I'm sorry, minute 50 out from 54, closing, rolling over into 55. Small red, but doing good. All right, we'll keep doing your job. Head down. Over halfway to passing an eval. Good work. Now, with evals, again, as you guys know, I like to size down into the finish line as you increase the amount of time that you have invested in it, because what's the biggest cost to the eval? You know, you use code BIG, you buy the party pack at Apex, they might as well be free. The financial cost to evals in comparison to what you can make off funded accounts it might as well be fucking nothing. So the cost of evals is your time, especially as you become profitable. And those of you guys who already are, as you become even more refined and even more profitable, the cost is really that opportunity cost of time. So as you invest more and more time into an eval or set of evals or test accounts, I size down to increase the probability of getting to the finish line. I start doing that around 2/3, 3/4 of the way to the finish line as far as profit target in the eval. That's what makes sense to me, so that's how I do it. But, you know what, big dog? Do whatever you want. All right, we got bar 54, 25 seconds out. Okay, watching 55, see if we can get a good sequence here, I still think. The look at this point, in my eyes, is basically that. So let's see if 55 can get outside of that and close quite a bit deeper. Ideally well beneath the wick low of 44. I'm going to bet on that range again if I can get a fill. And risk the wick low here. And let's see if those bears, if they mean business, they'll take out that wick low 44. And then we'll have more information anyway. ATR sitting at 33. 1R on this trade is 20 points. There you go, Bulls. Keep that pushing. So on a scalp like this, in this particular scenario, I'm looking to get at least better. Better than half ATR, I'd be happy. 1R would be great. But both those are very close to each other in terms of points. Well, go on now, Bulls. Come on. Get up. ATR 33. There you go. Keep that pushing. Keep that pushing. There's a rollover. ATR now 30. Ooh, interesting. There we go. Better than a half ATR. And get flat. All right, I'm flat. Keep it moving. Bar 56. All right, now I'm curious to see, are the Bulls able to take us back to the upper third? Like around here to the 47-48 body region? If not, and we fade and take out the wick low of 44, which is what I'm a little bit concerned about, closing inside the high of 54 on that last bar, then we've got a little bit more of a soft bear channel beginning to form, so keeping an eye on that here. All right, 317 out here on bar 56. You know, we're now in a really interesting spot. Again, I think we could see this just turn into a big soft bear channel. But if the bulls pop up, take out the wick high of 53, 51, then it's like, okay, maybe it is just a big trading range. But the longer that bar 55 and now 56 develop, I start seeing this a hair differently, but we're not quite there yet. All right, I'm gonna grab a refill. 2 minutes, baby. You stay put. All right, what's up? Welcome back. Big bar 57. We are, 52 seconds out from the rollover, and we still got a big old range. Now, with all these lower highs, it's not something you hear me say too often, is it? But, I mean, clearly, look, 48, 49, 51, 53, now 57. When I'm talking about range scalps, I'm not typically into, like, for example, you saw I waited till 55 to get long. I didn't get long on 54 because that's a sizable bear body in comparison. So for me, I'm not getting long on 57 just because we are tempting fate with the wick low 44. Especially with this new look, it starts looking more and more, well, I should say less and less like a range potentially and more like a big wedge. See that? There you go. Taking out the wick by a tick or two. Now we gotta see if the bears can actually snap that up. There you go, taking out that wick low. See that? That's a pretty high probability. That's why I'm not getting long on 57 like I did on 55. Okay, watching bar 58. 4 minutes out. Let's see if we can get a nice clean close out of 58. If we can, then I will short it. And not a second earlier. Chat, is this the beginning of the summer grind? Man, I hope not. I hope not. I don't think so. I'll tell you what, this summer has been much better volatility-wise compared to last. How many of you guys were here with us last summer? You remember, don't you? Yeah, for last 4th of July, man. ATR was what, about 4? Actually made a little bit of money. Probably shouldn't have. Alright, 3 minutes out here from the close of 58. Go on, you bears. I want to short this son of a gun. Halfway through 58. All right. We shooting dice in the chat. Is NQ testing 30K today? Anyone have the guts to say, yep, it is? Or they are in terms of the bears? I don't know. It's 150 points away, but the full range on the day is 250 points. It's actually possible. Or I should say not that incredibly improbable. Alright, less than 2 minutes here. Till 58 closes up. Choice says, nah, I think we're ranging. The volume profile's in balance. All right, we'll see. We'll see, man. Minute 20 out. Keeping my eye, by the way, on that wick low of 18, that wick low of bar 16. Low of day is the wick low of 2. Come on, bears, take us down, baby. Get lower. "30 seconds out. We've got a bunch of baby bears. All right, here's the rollover, 58 into 59. Man, those bears, they're all cocky until it matters. Last 30 seconds of that bar, bulls just took full control. So 59, I think, is going to be pretty telling. By the way, ATR just dipped below 30 briefly. It was down to 29.9 for a second. Which is fine, it's just not ideal. You know, we're getting into territory now. This is a tough read. It really is. Because you could look at it like this, and if you're having trouble making a read right now, you're good. It's fine. This is a very tough read. I mean, look at this. And then you've got the whole day. So... Now, by the way, when I'm trading on my own, I would never draw this kind of shit, but just for the sake of explanation. When there's too many arguments like this, until something changes, typically, it's going to be the most clear, reasonable range, which right now is about that. But of course... we could see it turn into this. I just think it's very dangerous to look at this rather than the range, which, I mean, you would have seen the same thing on bar 54, and then we just came right back up into the range. But, you know, you have more and more of an argument of a wedge happening as well. So, if the bears can't take out the wick low of 58 and 16 and head down toward the low of day, That's weak. That's weak, and we got a big trading range on our hands. I'm going to take a tiny little scalp stab here, and I actually just want to use the wick low of this current bar 59. No fill. No fill, that's okay. All right, here comes the rollover into bar 60. It went without me, didn't it? Now we're a little too high. All right, trading hours for this week. Yeah, so it is a little bit confusing, but the hours for futures are pretty simple. Today is normal. Tomorrow, Thursday, is also normal. Friday, futures close, at least CME-based futures, which is what we're trading, right, with NQ, ES, etc. On Friday, they close at noon Central Time, just for your time zone. But yeah, tomorrow's normal. Question, interesting that your scalps are going against the trend. You don't scalp with the trend, or are you just playing the bear channel? Right now, I have not classified this as a big bear trend. Context-wise, I do not call this a big bear trend. To me, this is a sideways trading range with potential to turn into a soft bear channel in the future, though it has not done it yet. If I did classify this as a bear trend, which it's not, if I did, which it would have to look quite a bit different to get that from me, I'd be looking for any reason to get short. We are not in that situation, from my perspective right now. And I know this is actually a really good teaching example because it looks like, you're like, dude, what the fuck are you talking about? From 25, we're in a big bear trend. All right, well, I can count with less than one hand the amount of bars that were clean short continuation bars from bar 25. There's almost none. You know, maybe 28. 38 inside close. 42 big wick. You know, these two, no sequence. That's not no trend that I like. Now, what I would like is if this could turn into a big bear trend. Heading into the, we got about 90 minutes left here on the day. If this could turn into a big bear trend, take out the low of day, which is the wick low of bar number 2, then I'm looking for any reason to get short, homeboy. And that would only actually take a few bars, minimum, which really isn't that long, but we're certainly not there yet. JJ says it's a flag. Any minute now, this thing is snapping upside. Well, I hope it snaps any direction because ATR is 30 and we can't afford to dip into the 20s. So I hope we snap upside. I hope we snap everything up downside. I hope we move. Anything but sideways. I'm thrilled. By the way, when people around you, they start, kind of finding out that you're trading, you're a full-time day trader, it's gonna happen. You watch. You watch. When the market's crashing, it's a huge bear market, like 2022 type shit. They're gonna be like, man, are you all right? Like, how are you doing? And you're gonna be like, I'm doing fucking great. Because we want volatility. You tell them, you worry about me. First of all, don't ever worry about me. But second of all, you can worry about me privately to yourself when the market's going sideways and the ATR is 2.5 on the New York Open. Then you can worry about me. Because as a day trader, my worst nightmare is that the market goes sideways for 3 years straight. That is tough. That's really, really tough. We need volatility to make money, man. All right, Bears. Keep that attitude up. I don't mind that look. Let's keep that up. By the way, guys, hey, Apex, 90% off. Single day pass code BIG. B-I-G. We get the party pack, big dog. We don't buy one at a time. Remember you used to have to buy one at a time? In the Stone Age? That is no longer. See this? Bulls stepping in. The Bulls are looking at this. They're saying, I don't know, man. It looks like a trading range to me. We just don't have that attitude out of the Bears that is necessary to classify this as a big trend. It's just not. We got a trading range that starts looking kind of like a soft bear channel. News? Damn straight, big dog. One at a time is for suckers. We buy 5 at a time over at Apex. With code BIG. Of course. ATR down to 29, by the way. All right, guys. Well, this is slowing down a bit. Reasonable midday session here, huh? it's time for me to go hit lunch. I appreciate you guys joining us. I will see you in the next one, man. Hey, stay patient, please. Let it come to you. You can't force it. You know, when the context isn't really easy to identify, when you're confused, the market's confused, and vice versa. When the market's confused, why the hell would I not be, is what I always say, right? So, let it come to you. Hang in there. If you're not having a good day, it's all right. It's all right. You know, there's going to be days where, by the way, it seems like you look around and everyone's deep red and you're green. And those days can get to your head a little bit. On the flip side, man, you're going to have plenty of days where everyone else, not that today's one of these days, but you're going to have days where, let's say it's a big bull trend and it was such a great opportunity and you're seeing people post record-breaking P&Ls and you're like, great, I'm the fucking schmuck who messed this day up. It's okay. There's always another opportunity around the corner. Just hang in there. Get a little bit better each day. All right, guys. See you what, tomorrow? All right, guys. See you tomorrow. Regular hours tomorrow. Early close on Friday, noon Central. See you soon.